man, we are 24 hours away from the most important day for crypto markets in years. Write it down, guys. Tomorrow is the FOMC meeting and the market is rallying up 5% here today. Bitcoin blasting through 61k. And if you're watching this video, you're one of a select few who are, regardless of what you've been doing, if you've been sleeping under a rock for the last 2 years, 3 years, 4 years, you walk into an opportunity which, if you take advantage of it, could change your life forever. The question is going to be, what are you going to do? Are you going to miss all the calls? Are you not going to build your conviction? I'm going to break down exactly what to expect from the market over the next 24 hours and beyond as we head into the most important Fed meeting we have had in over 2 years. Yes, remember, the Fed started to increase rates back in March of 2022. We've embarked on one of the steepest rate hiking cycles in the market. To all intents and purposes, expects that to end tomorrow. Yes, this market expects not just one rate cut, but now 60% of the market expects a double rate cut tomorrow. Will Jerome Powell meet expectations? Will he upset markets and send us crashing back down? Well, guess what? The market is leaving no room for error. This market is rallying. This market expects Jerome Powell to take action tomorrow. And if he doesn't, you can expect some pain. So we're going to break that down in detail right now. If you appreciate these updates where I blend macro with fundamentals and technicals, that's always been what this channel is about, then smash up the likes and don't forget to subscribe. If you actively want to trade with me, I've just dropped some important trades in my Telegram group, ijazzcrypto.com/TG. So if you actively want to trade, link is in the description. Let's get straight into this, guys. So the markets are rallying. We can see that. And it's not just crypto. Traditional markets are rallying too. S&P 500 has jumped to a record ahead of the decision tomorrow. So S&P is sitting now at 5,600, having a good day today. The NASDAQ is also having a good day, as is the Dow Jones. And the primary reason for that is this rate hike, right? The rate cut. People are expecting that Jerome Powell will come out and deliver a rate cut. But what's leading them to be so confident? Well, we just got some more data come in. We just had some more data come in to suggest that we are seeing a reduction in the growth fears. Remember, we spoke about this last week, that markets understand that inflation is coming down, right? We've seen that number continue to decline down. We got another good reading on the CPI. Fantastic. Let's tick that box. But the fear that remained started to be around, hang on, has Jerome Powell damaged the economy? Has he drove us into a recession? These are known as growth fears, right? Are earnings slowing down? Are retail numbers slowing down? Is GDP going to come in low? That's the fear around a recession. Well, guess what? We just got some retail sales data. It was expected to show a decline, so minus 0.2%. It came in at 0.1%, showing that retail sales are still strong. This goes against what markets were expecting and gives them the confidence that, hang on, this economy isn't doing too bad. Now, again, this is something we need to keep a close eye on. Any of the macro data that comes out suggesting that the economy is showing strength is good for us and allows us to stay risk on. Anything that shows the opposite will rotate us risk off. So that is why the market is sitting here saying, hey, Jerome Powell, don't break the economy, give us 50 basis points. Front load these rate hikes. Again, front load meaning, look, you're sitting here at 5.25. Bring us down quickly. Bring us down very quickly. Bring us down, make the first couple of meetings, which is September the 18th and then November the 7th, right? Make those double rate cuts. That's what people are saying. That's what people are trying to price in. If you see this 23% of the market here, they expect 50 basis points tomorrow. Then they think on November the 7th, we'll get another 50 basis points. Now you can see that the median for November is that people think we'll end up in this middle range, which is 4.5 to 4.75. In other words, they probably think we'll get 50 tomorrow and then 25 at the next meeting. And that's the main thing we have to get right now. There's a balance of matching the expectations, because literally as I'm recording this video, this market's excited. We have to balance these expectations with what Jerome Powell actually does, because the reality is, if that doesn't match up, we could see some upset. Because look, first, it was just the fact that we were getting a rate cut tomorrow was a big deal, right? We would have expected markets to rally. But the problem is, now that the market's got ahead of itself and priced in double, right, 50 basis points, there is a bit of a risk that if we don't get that, we could also dump as well. But here's the problem. If you've been watching my videos over the last week or so, I've been sharing that, hang on guys, if we get 50 basis points, this may indicate a bigger wall, right? This may indicate The fears that Jerome Powell hasn't got control of this. Maybe he thinks the labor market is weak. Maybe he thinks that we're walking into a recession. So we're in this bit of a problem where the market is going to act like Goldilocks. And that is why I'm being very, very careful with my trades and what I'm opening up right now. I am taking trades. You guys can see those. I share them all transparently in my Telegram group. But also for my long-term positions, I'm looking for opportunities to DCA. I would not be surprised to see liquidations in both directions over the next 24 to 72 hours. That's my prediction. I think we could see big moments like we're seeing today, but equally I think we can see some flash crashes, and we need to be ready for those. I don't think they're going to be crazy flash crashes, but I think we could see some painful candles which provide us some opportunities to buy the dip. So I'm active and ready for that. I'm going to share that in the charts very shortly. So just wanted to share, that's my view, right? I think we're in a double-edged sword situation where if Jerome Powell doesn't do 50 basis points, it's going to be like, oh, Jerome Powell, you're not cutting rates enough, it's a problem. But if he does do it, they're going to be like, what have you done to the economy? Why are you doing 50 basis points? Is it worse than we thought? Right? So this is what the market's going to be like. It's going to be a little bit of a problem to navigate because Jerome Powell's almost in this position tomorrow where it's like lose-lose. The only thing which may save him is his commentary. So he's got to get his action right along with the commentary. So there is a situation tomorrow where he could do 25 basis points, give good commentary in his press conference, and the markets will be okay. They'll be appeased. Equally, he could do 50 basis points and appease the market. So it's going to come down to his action plus then what he says in the press conference. And ultimately what we want to hear is that, look, the economy is healthy, rates are going to come down, we're not going to mess around and bring them down. If we don't need them high, we're going to bring them down, and then we want to hear those kind of things. We want him to be nice and dovish. That is good for money flow, and that money flow flows into risky stocks, flows into crypto, flows into the altcoins, right? That's why all of this matters. Okay, now there's also another survey that went out. This is known as the CNBC Fed survey, which is actually quite interesting to read. Watch this. The survey shows 84% of the 27 respondents, including economists, fund managers, strategists, see the Fed cutting by a 1/4 percentage point. Okay, so they're expecting, the most of the market here is expecting just 25 basis points. So even though we're seeing here that majority of the market across the board, this is using the CME futures. Remember, whenever I use this is based on what's priced into the market, in the futures market, using the CME Fed fund future prices. That is different to this survey. This survey is just of economists, of fund managers, of strategists. They take 27 respondents and they give you a survey, right? This survey thinks that the majority of these people think we'll get 25 basis points. The differences grow over time, with survey respondents forecasting a year-end Fed funds rate of 4.6 and 3.7 by the end of 2025. That's what we covered off. We believe that the equivalent of 8 cuts in 6 meetings is more than what will happen. That forecast is more in line with a hard landing than a soft landing. We suspect the FOMC will either underpromise or underdeliver, perhaps both. And this is why it's tricky, right? It's ultimately trying to balance this soft landing with making sure that the market is not upset or not think that we're heading into a hard landing. We have to make sure that Jerome Powell balances, like I said, his actions with his words. He's got to make sure whether he does 25 basis points, make sure you're explaining why, make sure that the market understands that we're not in trouble, that the market is healthy, that the economy is healthy, then markets won't worry. But if you do 25 basis points, then a couple of weeks later, some new macroeconomic data comes out to suggest that the economy is weak, you're going to get more panic leading up to the next FOMC meeting on November the 7th. So he's got to get this one right. This one will start off our rate cutting cycle in the right way. Okay, so this is critical. Now, let's jump back onto the Bitcoin chart here. You can see a big, powerful day here, 5% day, which is very needed here on Bitcoin. We've carved out the higher low, which is very, very important. We've got ourselves a higher high here, beating what we got on Friday, which hit a high of 60,600. We're past that now. Really nice structure in the chart. Now, just to zoom out, I've maintained, despite the wicks and candles and liquidations, that we are in a bull flag pattern, and oftentimes to some stick, right? Some people complain that I've just been so focused on this pattern, but this is the pattern. We don't need to complicate it. I don't need to pull out 100 other indicators to show you that this is the bullish continuation pattern, which we have been in since March. If we lost the structure, we reevaluate. But we did not break down. We wicked down below this, but we did not break this structure. We've stuck true to this structure. And if I show you the weekly chart, you can see it even more clearly. Look at this structure. Look at the structure of that, and also look at how it runs into the EMA ribbon. Look at that. That's without the EMA ribbon, and look at that, how it respects the EMA ribbon. We're running into the EMA ribbon, and we're trying our best now to bounce, and today's candle could see us close above the EMA ribbon, which is really, really important, okay? So this is showing that good strength from the market, bouncing from the lows, and again, trying to work its way. Doesn't mean we're out of the woods. We know that this center line, this red zone that we have here, between 63,300 up to about that range of 63.8 is very important. We got rejected from it last time. We got to get above it. We got to start working our way and get a touch up here. Remember, last time we came off the bottom, where I showed you that I was buying the dip here and buying the dip here at these yellow lines, we called this flush down very nicely here on Bitcoin, and we called the bounce perfectly as well. But what did I say? I said, guys, we need to get a higher high. And it couldn't work its way there. It got to the center line, which we spoke about, which was the M pattern. Remember this M pattern, which we broke down from? It got to that center line, boom, rejected all the way back down to the bottom. So the bears are in a good stronghold around this price action. I want to see us break clear. Let's take our time. We don't need to go as quickly as we did on this candle, which was a 6% day on Bitcoin. But take your time and start working your way above this line. And I want to see us mount an attack here. Remember, we can't afford to lose this pattern here on Bitcoin. We need to break this pattern in the upward direction if we want a powerful end to the year. Remember, this is the pattern that takes us to those nice price targets up towards 100,000 on Bitcoin. And you can imagine what that means for altcoins once that sets going in motion. Okay, so really important here on the daily chart. We're getting that close above the EMA ribbon, which is really good. Let's consolidate and let's get attacking through that level. I really want to see us get past that kind of 63 to 65 range here where we got rejected and start moving onwards up to about this level, that 68 level at the top of the pattern. Let's start breaking that. Now again, look, bears are still showing good strength, right? They will have to now close us back down below this EMA ribbon, which is going to be tough, especially with the FOMC meeting providing the wind behind the bull sail. But again, Jerome Powell can dump markets. We have to be prepared for both directions. So if Jerome Powell comes out and upsets me tomorrow and upsets the market tomorrow, I'm going to get ready to buy the dip. Don't be surprised to see us rotate back down here to some of these price levels, back down at 52, which will be quite painful for the markets, but I'll buy the dip. Equally, nice, good, solid meeting, maybe a good 25 base point or even a 50 base point rate cut, along with good commentary in the press conference, could see us rally through 65 and up towards that kind of 68 level. And that is what I'm looking for here in crypto. Ultimately, crypto has shown really good strength. I don't care what people say, this sideways consolidation movement is actually really good strength. This market has been doing that, and for the majority of the time been staying over 60,000 despite fear and greed index sitting low, right? Fear and greed index over these periods of time have been in fear. We're sitting at 33 right now, and yet the market is running at 62,000, close to 62,000. I mean, over the last few days, we've started to see ETF inflow start to come back in as well, which is really, really good. We've had 3 positive days in the green back again. So we're starting to see that confidence come back in. We're starting to see risk rotate on. But look, zooming out of all of that detail, which I've just shared, what is it we're facing right now? We're facing a turning point, right? You've been driving on this motorway since March of 2022, a motorway known as tightening, monetary policy tightening. Inflation was too high and the governments and the feds were not on our side. Since March 2022, they were taking money out of the economy. They were reducing liquidity. But now, from tomorrow, whether we get 25 base points, whether we get 50 base points, that's irrelevant. It won't even affect the markets for the next 4 weeks. It doesn't matter. In other words, what I'm saying is a 25 basis points reduction tomorrow doesn't affect your mortgage or your finance payments overnight. It really doesn't, create huge liquidity flows overnight. It's more the fact that you've got to the junction and you've decided to take the slip road because you want to go in the other direction. And so over months and years, we will now rotate from a monetary tightening policy to a loosening one. The feds will start to cut rates. People will start to find finances a little bit easier, which gives them a little bit more disposable income to invest in some stocks, to invest in some crypto, to buy some altcoins. And that is the foundational blocks you need for an explosive bull market. This time with more adoption, this time with Bitcoin ETFs, this time with Ethereum spot ETFs, this time with more knowledge about crypto, more on-ramps, more exchanges than ever, which you can use to buy crypto. Lots of people now will onboard into this cycle on crypto, and I'm going to be part of it. Are you going to be part of it? Let me know in the comments below. Say, I'm here to stay.